Oh boy, here we go again. Back to work tonight, guys. Thursday is behind us. Time to get ready for Friday and finish up the week strong tomorrow morning. It's Thursday evening. It's the 13th day of January, 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades, setting up for Friday's trading session. I got a great video in store for you guys tonight. Charts are all ready in the background, as you can see. We got the oil, we got the Nasdaq, we got the S&P 500. We got you here with me as well. Great to have you back here for our video newsletter. Got a lot to cover tonight in this video. Got some big moves down today. Who could have ever seen that coming, right? Big moves down today. Would love to sell some pullbacks, some retracements, maybe some ranges down here. I'm going to cover all my favorite trades in tonight's video. We'll also talk about some stuff to avoid to keep yourself out of trouble, whether you're trading on your own tomorrow or you're trading with us in our trade room. Before we jump into the video tonight, though, we'll get our hands dirty on these charts. Got a lot to cover tonight. Make sure you subscribe to our YouTube channel because, I publish this video newsletter with my best trade ideas. We publish these every evening on this YouTube channel. Make sure you subscribe. Hit that little bell icon because a lot of this stuff is very time sensitive, right? So make sure you subscribe so you don't miss tomorrow night's video. Also, if you guys have any questions for me, drop those questions in the comment section. I would love to answer any questions that you might have along the way. And if you enjoyed this video as much as I enjoy making it, if you tune in every evening to enjoy the video newsletter, hit that like button, that thumbs up here for me. Appreciate you guys carving out some time in your busy schedule. But enough of the intro, though. Speaking of busy schedule, sorry I'm running late here this evening. It was a busy day today in our office here in Los Angeles. Let's get over some charts, though, here, shall we? Everything is bearish, right? Everything. Bearish here on the S&P. Bearish here on the Nasdaq. Bearish here on the crude oil. We talked about many reasons why we kind of anticipated that at some point today. And so we definitely got what we anticipated on last night's video. Now, kind of the core, key component right now is the strength, right? Very strong move down. Very strong move down. Very strong move down. Anytime we see strong, big moves in one direction, my job right now is to find those areas of resistance, right? And, short those bounces, right? Just short right into those bounces. So the game plan for tomorrow is relatively simple. Now, of course, tomorrow's a Friday. We get a bunch of ranges on these charts here right now. So who knows, right? Maybe the bounce turns into a reversal. You could easily see that coming, right? These markets are always full of surprises these days. So we'll talk about kind of what's the difference between a pullback you can short into and a pullback that turns into a reversal. I've got a handful of pullback setups or retracement setups I have my radar for tomorrow. And guys, don't forget, we've also got some pretty big targets down below. The S&P still has some room to go. Nasdaq's got a lot more space to go. So does oil till we get back down to that big 80 round number. So this thing may keep on running lower here as well. So we'll talk about kind of what to do if the market starts to kind of dribble lower here overnight as we go into some really big news tomorrow morning. So now, speaking of tomorrow, actually, why don't we take a look at the schedule for tomorrow? I'm going to come back to these charts in just 2 seconds here. Let me grab a look, though, here right at the schedule for tomorrow. Tomorrow, of course, is a Friday. Now, Fridays are oftentimes a little bit smaller window of opportunity. So just be aware of that, kind of the window of trading opportunity. I always tell my students in the trade room, you want to see some good personality to it. You want to see good volume coming in. You want to see good rhythm in the candlesticks. And if you don't know what that means, if you don't know what good personality means and, good rhythm means, we'll talk more about that as we go a little bit later on in this video. But what you want to be aware of tomorrow is usually that window is a little bit smaller, right? So we're not going to trade all day long. I try to find my trades as early as I can on a Friday. Sometimes that bleeds into the early part of the afternoon. But hey, if it's not moving quickly, late in the day tomorrow, don't force it. Again, that window of opportunity is a little bit smaller. The two big news events, though, we're going to worry about for tomorrow, the two potential potential market moving events, the retail sales number is definitely going to be something we're watching tomorrow. Inflation was at 7% on Wednesday. What was like 9.7% today from that PPI. Some experts say it's close to 15% right now, right? Is that those rising prices? So we'll see if that affects the retail sales number. That's going to be something we'll definitely have on our radar tomorrow morning. And then, of course, I would think the consumer sentiment numbers oftentimes are leading indicators, right, for turns in sentiment, or kind of those blow off top sentiments are also leading indicators as well. So I would expect a lot of traders to be watching that 10 o'clock consumer sentiment number. If that stuff really starts to come out way over expectations, it kind of leads to that kind of blow off top, right, that oftentimes predicts, right, a major reversal. And since we got the bears going lower here already, that'll definitely be something we're watching here for tomorrow. So those are probably the two big news reports that have the potential to move these markets around. Now remember, we're traders. We're not gambling off the news. I'm not trading the news tomorrow, right? We're going to wait for the news to come out, see how the market reacts to it, and then we'll trade the reaction. Now, don't forget, guys, we get together in our trade room, 8 o'clock Eastern time. I would love to have you there trading right along with us. I'll put all the important links, all the membership stuff, all the details you need. I'll put it right in the description of the YouTube video, or if you're on the blog right now, I'll put it right in I'll put a big button for you right below this video on the trading website as well. So hit that button and you'll get over to the membership site and get access to our trade room. All right, speaking of trade room, let's get these charts ready to go here. Help us make some money here to finish up the second week of the month. S&P, Nasdaq, oil's all set to go. Why don't we grab a look at the S&P first? The S&P and the Nasdaq are both very similar, but they definitely have some differences right now. Really in a nutshell today, right? The market, of course, starts off chopping around inside that trading range. As we talked about, there were a bunch of levels of resistance up here that we anticipated, right, would be great places to sell short or roll over to sell it from there. So the bottom line is, right, we get that nice breakout going lower. That breakout leg, of course, leads to another leg lower, and we anticipate that breakout leg may be used for a measured move here, right, over if we get the pullback right now. Most important thing right now is we have, let's see here, what's the most important factor right now? We've got a very strong move down. Anytime we see a really strong move, in this case lower, we would anticipate that sellers are going to be eager to sell into any pullback off of this low. Second kind of thing we have here is a range. Ranges act like magnets, and in my experience, we see a lot of times where you'll see these big breakouts. They'll come back and they'll use kind of the underbelly of that, right, of that trading range as an area of resistance. So you combine the strength of that move lower along with the that overhead resistance, toss in a couple trend lines coming down overhead, and you've really got a great spot here, right, to sell it as it bounces. So really, in a nutshell right now here on the S&P, we're pretty much at the point right now we're waiting for a bounce, right, to sell back down. If that bounce turns into a reversal, we would assume that range back above us would be the objective. We definitely want to keep an eye out for a trading range, and it looks like we get a range developing right now that will slightly change the game plan if we see a range here overnight. And like I said before, we also have potentially, right, some more levels down here. We get a big round number at 4,600, got some big areas of support down here. So, we might not be done yet. The market may keep going lower. And so we want to make sure we're kind of ready for that pop, right, and back up from there. So it's really just sell those pops right now, right? Sell those pops off the low here, and then we'll see if those pops turn into a reversal here. So, all right, how do we buy it? How do we sell it? Again, we have a big strong move down here, so I'd like to get short, right, as we pull back. As you can see right now, it does look like, if you kind of look at this chart a little bit closer, you'll notice we have what I kind of call a stair-step pullback, right? A stair-step pullback. Now, stair-step pullbacks are pretty cool because when a market stair-steps its way higher, what you can do is you can draw a trend line up that first low, and you can grab it, right, as an area, see that? As an area of resistance on the other side. So as you can kind of see right now, right, as the market kind of stair steps its way higher here, we get up into the top of that channel. We get up into that trend line coming down. Ideally, if I get it my way, we'll get up into this area here around that 46.75, 46.80 area. Get up in this area here now, get underneath, right? Grab that trend line. We call these two-legged pullbacks. They usually have two legs to them, right? There's usually one leg and two leg. This one would kind of be a 1, 2, 3. Don't worry about there being three legs. There could be four legs for all I care, right? The key though is that we start to stair step our way up, right? And we can use that two-legged pullback for the entry. Now, sometimes what happens is sometimes you don't get that under, up, and go. Sometimes what'll happen is it'll go lower and try to run without you here. If that's the case, just look for a little trap entry. We call these trap entries right above a prior swing here, right? So think about how that may happen, right? So we don't get the underneath and go. We don't get kind of the ideal entry. There could be some big bears up there, sell into it. The price starts to tumble lower. We don't want to sell down near those lows, right? We want to make sure we can risk small to earn large. That's why a trap entry will really be a nice entry there, right, on this type of pullback. Now, at some point, right, maybe you're wondering, well, at what point does a pullback turn into a reversal? At some point it will be a reversal. Well, you notice what happens a lot of times, right? A lot of times when you have a very strong bear move down, we'll end up popping above the moving average. The buyers will try to hold it, right? And they'll fail ultimately, right? And we call these failure setups. Right? We call these failure setups to get short there. But let's say, for example, though, we get up around these highs. Let's say these buyers, though, instead of failing, right, and crashing back down, which, again, if we didn't have that trend line coming up, would be a very viable setup there. Keep that in mind. But if the buyers can hold this, right, if the buyers can hold this, and if they can really push off the moving average, then what I can do is I can find a new channel and I can structure my entry buying that first test. And you're going to hear me say that a lot here in this video, right? The first test is always the best test, right? Now, keep in mind, we're not just going to blindly buy, right, the low of that channel. I use price action. I don't trade much with indicators. I look for things like traps. I look for failures. I look for pullbacks, right, maybe strength moves coming off of that low. Now, I'm not going to go into all the small details, all right, about the entry techniques that we use and kind of, what the rules are and what to look for. But I'll tell you right now, I cover all the entry setups, all the rules, when to use them, when to skip them to avoid losses. I cover all of those smaller details in our free trading course. We have a great little quick start course on our website. I'll put a little button up there for you in the upper right hand corner. Grab that free trading course. You'll learn my 3-step strategy, the roadmap that we use every day in our trade room, and I've got literally hundreds of examples of how we apply those entry patterns to our favorite futures market. So that's definitely something looking for here, right? If the market was to, let's say, for example, right, we have that trend line coming up here. If that trend line was to hold and the buyers are able to, right, explode off of it, yeah. Now remember, it doesn't matter how deep that pullback is. All that matters is can they hold it, right? Can they hold it here? All right. If they can hold it with that 1, 2, 3 move, jump off moving average, now find that new channel, mark off the high, right? Drill it down, right? And find that first test. Now, there could be a very deep pullback on this, right? Deep pullbacks are perfectly fine. I'm going to talk about what a deep pullback might look like on the Nasdaq. All right, so we'll cover a couple more examples on the Nasdaq as we go deeper into this video. What looks more likely again right now on the pullback is to get that two-legged pullback here on the S&P, or again, if they hold it, right, get that reversal. Now, if they go sideways here, it does look like we likely have a sideways range brewing. Not a lot changes, but one good thing about a sideways range here is ranges act like magnets. There are two ways that I like to trade a bear market into a range. First things first, you got to find the range. Then find levels of resistance up above the range. Okay, this could be prior swings, it could be trend line. There's a lot of different ways in which we'll find those levels of resistance in our trade room. And again, you'll learn more of those smaller details in our video classes here on the website. So again, we find levels of resistance. Now, what you want to do is you want to remember it's a bear market. That range will act like a magnet. Wait for the pullback. Eventually, the sellers will run out of bullets if it goes sideways like that. When they get that pullback, though, now we go in. We don't get fooled and try to buy that pullback, right? Remember, like I said up here, let them go up, let them try it, and then sell right into those stop losses. That's exactly what I'm going to look for here above the top of that trading range. Again, I'm going into an area of resistance, right? That's the key. And then we're not trying to sell into it. I like to wait for the price to pop up. Buyers try to get long. Their stops are hanging out right below that low, and we can sell into those stop losses, right? That's a failure setup. Now, one of my favorite follow-up trades on that. Think about how much the market moved above the range. Project that down below the range. Okay, and that's going to become your objective, right? That's where the market wants to go. Now, find a new channel by drawing off those lows. Find a trend line off those lows. Copy and paste it back to the high, and then drill down. Right? I say drill down because this is a 7,000 tick chart, right? Upper left-hand corner there, right? We're not going to trade off a 7,000 tick chart in the trade room, right? But we will drill down to our faster time frame, and we'll find our price action entries, which again, you'll learn about in that quick start class, right? So those are two ways I like to trade this. If we go sideways, it's a buyer failure. And then again, it's the first test of that new channel. And again, it might be a pullback, might be a failure pattern. We'll know more from there. One last scenario that I want you to be prepared for. What if the market keeps on rolling lower? Right? What if it keeps on rolling lower? This is a very likely scenario on the oil for tomorrow. What if the market, though, keeps on rolling lower, right? Let's say, for example, the gig is up, everybody's getting short, everybody's getting out, right? Market starts to bleed and runs lower overnight. Okay, what do we do in that situation? We don't want to chase after it, right? We don't want to sell low. Selling low is for rookies. You're not a rookie anymore if you're watching this video right now. I'm going to draw a trend line off that low. I'm going to draw it way up around that high. And then what you want to do is you want to think about where we have some prior swings, right? You want to think about where we have some prior swings. And what I like to do is I like to get up above one of those prior swings, up around the high of that new channel. And what we oftentimes see is a trap set up. Buyers will come in and try to get long above the moving average into a failure setup, right? Into a pullback combination, traps set up, traps above prior swings, right? Buyer failure up around the moving average, right? Like that, right? And then of course that pullback combination. Okay, three pretty cool little price action entries off the top of that channel. Think about where those prior swings are. That will almost always get you on the right track here. And then what you want to think about in that situation is where would the next target be in that situation? It's going to be the size. It's going to be the size of that leg that I had earlier, right? So this leg right there, that leg right there. Right? That leg right there. Remember, if this keeps on bleeding lower here, the size of that leg, right? Again, this I know it's a little bit advanced, right? But we keep running lower, right? That leg right there, we pull back. That leg right there, right? That'll be your measuring leg going lower here. And obviously, we'll know more tomorrow. We'll update things with those students in the trade room. All right? So that's how I'm looking to sell it, and that's how we'll know if it turns around for a reversal. Okay, don't fall for that strong bounce, right? They have to hold it and go. In fact, let's talk about strong bounces, right? Because the Nasdaq definitely does look like we might be in store here for a bit of a strong bounce. Well, we talked about how heavy the Nasdaq was in last night's video, and they must have been listening to us, right? Because it felt pretty heavy here this afternoon, right? Okay, so what's going on right now in the Nasdaq? Unlike the S&P, the Nasdaq really didn't get hung up very much in that range, right? So I've got this thing. It's pretty pretty straightforward. We get a pretty strong bear move down, right? Most recently, a very strong move lower that, as I always say, separates away from the moving average. We call these open loops, right? Anytime we see the market really separate off the EMA like that, it's such a strong momentum move that we have to assume that sellers are going to be stalking these areas of resistance, right? And looking for a way to short this thing back down, right? To retest that low. So, that's kind of in a nutshell, I think probably the most important factor. The second kind of important factor is you'll notice we just hit that measured move, right? There's one leg, there's two legs, there's three legs. Now, you may recall me saying earlier this week that most trends go in threes. There will be some times where you see a four-legged trend, even a five-legged trend has happened. I mean, anything is possible. But most of the time, though, you'll see a market go three legs and either go into a range or give us a nice deep pullback. And this is where I think we might get that nice deep pullback here, right? I got a couple sell zones. Right, 1 and 2. The second, another component here would be this range, right? Ranges act like magnets, and so we kind of run lower. We get chopped up inside that range. We spit down. It would make perfect sense that traders are all waiting to short the underbelly on that breakout pullback, right? You can see the channel lining up off that low. Looks great. I mean, you got to love this whole area right here, right, for a short. So we definitely would like to. Again, it kind of all boils down to, right? Do we get the pullback and the short signal back down again? Do we get that pullback and they hold and reverse, right? Do we go sideways in the range, or do we continue to kind of bleed lower here, right? And we've got 15,000, but more importantly, we got that big level down there, 15,150. That's that major low, right? This little guy right here is just a bit of an appetizer, right? That's the big low down there. That's where these bears, you got to think these bears would love to get back down to that level here. One thing that's definitely interesting, you'll notice this 15,570 and a quarter. We talked about this earlier this week. This is last Friday's closing price. So what do you think the odds are that we move and shake and wiggle around a bit tomorrow, right? We end up hanging out right around that. It's definitely possible, right? It's very common for us to begin a week and finish the week in relatively the same spot. So that's kind of a good reference point for us there. All right, so a lot of this is going to be similar to the S&P, right? In the sense that, if we do get that two-legged pullback, right, off of this low, we're going to want to use that trend line, right, for the short. That will also apply here to the Nasdaq. One thing you can definitely kind of anticipate here is we may see this market, for example, let's say it does go up into our resistance zone here. At that point now, you can definitely try to trap in those buyers above the moving average, right? Anytime we have a real strong move like this, just wait from the pop back above the moving average. Let those buyers try to commit and then short into those stop losses, right? That's a really easy way to make money in a trending market. We have the trend going lower, nice and strong right now. Get this thing up into these areas of resistance. Let those buyers now, right, try to come in. All of their stops, think about it, all their stops are sitting right there, right? I can use my failure pattern to sell in the stops. As long as I can get in before the retest, I can use my pullback pattern, right? So failure pattern, pullback pattern. Again, I'm just simply illustrating these right now. I have hundreds of examples along with all the basic rules of when to take them and when not to take them. I cover all that stuff right in that free trading course linked up in the upper right-hand corner. One thing I would definitely keep in mind on the Nasdaq, because we are three legs down, it wouldn't totally surprise me if we really popped up. Right? So here's kind of an easy rule of thumb, right? If we've got this channel coming down, and I really like this, this whole area, really nice. If I get up in this area, right, above that moving average, I'll look for a buyer failure to sell it back down, right? But let's say, for example, though, I get well above that channel. right? What happens in those situations is you'll see buyers come in and they'll try to actually use the top of that channel, right? They can be very crafty like that. And what happens is when you get this big, deep pullback like that, you want to give the buyers a little bit more of the benefit of the doubt. So we really pull back, and a good rule of thumb here is if we get above that channel high, what I always do is I always use the 2-try rule when it comes to my failures, right? So I wait for the buyers to try once, I wait for them to try twice, then I've got all the aggressive buyers are in, the more patient, right, more experienced buyers, the deeper dip buyers are now in. All of their stops are sitting right here. Now, watch closely on this because there's a lot of different cool ways you can enter off of this. One of my favorites is a trap just above that prior high, right? One of my favorite entries, nice big signal candle closing below the moving average. You get yourself a great entry into that. We also sometimes, right, all we'll get is just to draw a trend line off of that high, right? And then we get a nice short from there. So it really all depends on kind of how that thing sets up. Now, the next thing I want you to think about is as the market rolls lower, as we roll lower, remember, at this point, there is a big bullseye on that low, but people don't want to sell low. They want to sell high, right? So here's what you want to do. You want to draw a new channel off that low, bring it up around that high, and then like I mentioned earlier on the S&P, think about where that trap could be. Right? One of my favorites. So again, it's a 2-try failure because of the strength of that pullback, right? 2-try failure into a trap setup. Right? And keep in mind, this could be a trap, it could be a failure pattern, it could be a pullback combination. You'll see more examples of that in the trading course. All right? So we definitely have that all covered. We know where we know where they want to go, right? Back down to retest the low. What if the buyers hold that pullback though? Right? I mean, come on, that could easily happen, right? Absolutely, that could happen. So let's say, for example, now we do get that deep pullback, but instead of the buyers coming in and trying and failing, now the buyers come in, they hold it, and they jump, right? Now, remember, it doesn't matter to me how big that first pullback is. It really doesn't matter to me. All that matters to me in a bear move like this is you got to hold that pullback. If they can hold it and go, that short squeeze now I can mark up that high. And again, think about it as this thing starts to, race higher here. You're marking up that high, you're marking up that low. You're going, okay, give me one of these pullbacks, right? Give me one of these pullbacks. Get down underneath the moving average on some prior swings. Grab those traps, those failures, right? Those pullback combos. And then, one more thing. Don't forget, right? This leg right here, okay, the size of that leg, that is almost always going to be the size of that leg. Okay, so that will give you an idea of kind of where that next target's going to be as we go. Obviously the buyers are going to want to go back to retest today's high. That's kind of an easy giveaway, but that will give you more. Remember, markets love to go in threes, and they love to give you that first leg and final leg. Oftentimes that middle leg is the oddball. Right? We don't really worry about the symmetry of that middle leg, right? We pay a lot of attention to the first one and the last one. All right, guys? Now, there are a couple other reversal patterns, but we'll keep that for the video classes here at School of Trade. So make sure you get registered up and you'll learn more of the more advanced tactics that we use in our trade room. As the market goes lower, this again is where things could get really good here for those sellers. Let's say, for example, now, right, the market starts to roll, right? Starts to roll lower. Again, same idea, right? Mark up that low, find that channel, right? Think, look left, find those swings, grab that trap, grab that failure, grab that pullback entry. You'll learn the rules to that in that free trading course I mentioned earlier, but that's what I'm looking for as we go. Let's say all hell breaks loose, right? Let's say that all hell breaks loose, right? Something happens, big move lower, right? It's not grinding down, okay? It's cranking lower. Okay, watch out for this setup. If it really pushes lower, strong move down, shallow pullback, lower low in price, right? It's not the grind like I mentioned before, right? It's a strong shot, right? Strong shot down, shallow pullback, lower low in price, grab that trap, right? Grab that trap. Now, if you can find a channel, great, right? If you can find a channel, absolutely great. Not necessary, but definitely an added bonus. And again, we know where the market wants to go. That 15, maybe 152, right, is going to be the low down there. Now we get a pretty idea for how to trade this thing, right, as we go lower. Again, same thing goes for a range. If we end up at any point here going sideways in a bear market like this, we wait for that pop. We do not chase after it or try to predict the reversal. We wait for those rookies to try to do it themselves. We sell into those stop losses. We find that new channel. We sell that first test, right? First test is the best test. Failure in the first test pullback. Where's the objective? On the other side, right? On the other side of that pendulum swing, right? That's how you want to trade that thing if it goes sideways into a trading range. All right, I think we're looking pretty good, right? Looking pretty good. Again, pretty straightforward here. I think this is a relatively easy kind of setup here for the Nasdaq and the S&P. How about some oil? So oil. Now, what's going on with oil right now? So oil has a lot of potential here right now. We get the big round number at 80, right down below us. We get this big time low. Not big time low, but big time prior high back there, which we can definitely assume is going to be an area of interest, right? That prior high, obviously, if they could get this thing really going, that would probably be a little, not that much though. What is it? We'll say 82. So that's what, that's like what, a $4 move? That's not that big of a deal. Oil has been known to make a $5 move every once in a while. It's not likely, it's not probable, but it's definitely possible. I would imagine $80 a barrel would be a little more likely here for the bears here, given the size of the kind of typical range here right now. Anyways, I'm getting off topic though. What are we looking at here right now? The day today was pretty much a range. The day today was pretty much a range-bound market, right? Tossing around back and forth. One thing that we notice is, right, is the market, of course, goes lower. The amount we go underneath that trading range is usually going to be the amount we go above the range. And you can see they didn't stand a chance, right? Didn't stand a chance. You can tell there were probably some channels drawn overhead, right? And bears were looking for a nice big run here, right? Call it a 1, 2, 3 breakout, whatever you want to call it. This is a very strong move down. And again, anytime we see a strong move lower, we know there are going to be a lot of bears hunting for levels of resistance overhead, right? And selling into it as we go. Now, we, of course, have the same options for the oil as we did for the for the S&P and the Nasdaq. One thing that I would definitely bring to your attention would be a shallow pullback, because there really is potential. There could be a much steeper channel here right now. I chose to draw it a little bit wider just because that's kind of the ideal. That's kind of the ideal situation would be to get this thing to pop up into that 82.15 area and get that short from there. But make no mistake though, when you get a move that really rips like that, you can usually get away with that channel, right there as well. So how do we trade it if all we get is a shallow pullback? So when it comes to pullbacks, what you want to kind of remember is shallow pullback traps, deep pullback failures. Shallow pullback traps, deep pullback failures. And if we see a stair step, then we call that a two-legged pullback, right? So again, we talked about the stair step. If they bounce off that, right, and go higher here, right? We talked about kind of the game plan on that one, right? If they don't get it, the trap like that, right? We talked about those on the S&P. Very, very similar here on the crude oil. We talked about if we get up in this area, buyers coming in, trying to get long, we can take that failure into that pullback combination, selling into buyer stop losses, selling that first pullback at the moving average, and targeting right down at that low again. Another one that I'd be looking for here would be again, shallow pullback trap. So imagine now all we get is we kind of run into this area right there. The buyers go once, the buyers go twice here. That'll be your shallow pullback trap. Now this works well right now for two reasons. One, it's a very strong move down, so you can, there's almost a guarantee we retest that low at some point early tomorrow. Two would be because of that potential channel, right? And three would be, as you can obviously see, right, that prior level has not been used yet. So I have no problem with that shallow pullback trap, but just remember, you want to get a good risk reward ratio, right? If we can get a really big bounce off this high here, that's a great way to risk small to earn large. It's a very easy way to get a good risk reward ratio on that. If we don't get a very deep pullback, we have to do our best to try to sell as high as we can. And so that trap setup will definitely be that will definitely be on my radar there. And then where do we think this market wants to go? Again, 80, 80 is a really good round number. But remember the breakout leg, right? This was that breakout leg. That breakout leg is oftentimes going to be your measuring leg, right? So that'll give you an idea of kind of where to leave that target with. Right? Don't worry about these legs way up here. Those are irrelevant right now. What's most important right now is that's the breakout leg, right? So you take that leg right there, project it down. That will give you kind of where that at least medium term target is going to be here on the oil. I would also say too, because we have this big trend line coming down, just like we talked about on the Nasdaq, right? What if it really popped up? What if it really popped up? Now, it hasn't held the pullback and reversed yet, but it really pops up. It gets above that channel, right? The buyers have a hard time with that trend line. What do? You use a failure pattern because a deep pullback failure, but you got to use the 2-try rule. So you let the buyers try it once, you let them try twice, right? Maybe we get that trap high above that swing. Again, we talked about those smaller details earlier. All those stops now are sitting right. All those buyers, they're yelling, uncle, 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 right? They're waving the white flag if we start seeing that big, juicy signal candle, right, coming right back down in. And then what do? Right? You don't just kick your feet up on the desk, right, and bask in your own success. What do you find that new channel? Because this is the one that's usually going to be, this is the one that usually has the higher winning percentage, right? Is that turn, right? Sometimes it can be difficult to time the entry off those deep pullbacks. Sometimes it just, V tops and goes right back down again. You can almost always find, right, that trap above that high on the way back down, right, to retest that low. And if for some reason, now, so here's something to think about too. So the buyers don't really have, I'll tell you, it's going to be difficult to get long in this market right now. It really is, right? And I'm sure there are some folks out there that will say, oh, this is a bull flag. It's a strong move up, a choppy move down. That looks like a failed flag to me. I wouldn't call this a bull flag. But let's just say the buyers do take control. Right? Let's say the buyers do take control. Let's say we do end up popping higher. Let's say the buyers do hold that pullback and they run. So what exactly is the game plan here? I'm not going to buy that one. Are you crazy? No way. Right? No way. And I've got a very big problem buying up here because just look at all of these areas of resistance up here. So it's going to be difficult. It's not going to be easy here to thread that needle, right? But you can definitely kind of anticipate where that may happen. Right, getting above it. Not going to be easy, right? Not going to be easy. What is probably going to be the easier money to make would be to wait for the reversal. And I know it's tough because we don't want to miss anything, right? But sometimes it's not worth trying to get into something because there just isn't enough meat on the bone, right? So we do get that run higher. We take out that high, right? And now all of a sudden we still owe. This is a major top over here. We still have that range below us. Right now, if they hold this and keep on going, then yeah, we got to bite the bullet, find a new channel, right, and get into this thing. You know what I mean? I'm just saying right now, though, unless we can get in right off of that trend line, right? Unless we can get that 1, 2, 3 like this, right? Get that pull. And again, I say pullback, but it could be a trap entry or a failure, one of our price action entries off the low of that, right? Unless we can get something like that, it might be easier money out here to get up around those highs, right? Let these buyers now try once, try twice. We talked about this, right, earlier this week, right? We called some of those big shorts off the high earlier this week. Once those buyers try a couple times up here, they're right into resistance. The range is the magnet. You got it, right? There's that short back down. There's find that new channel. It's just rinse and repeat, right? Rinse and repeat. Again, it's very bullish, right? So you want to use the 2-try rule. There's a range below you, so you're considering a failure at resistance. 1, 2, think about stops getting hit, right? And then think about that first test is the best test, right? And again, as I mentioned earlier, right, if the buyers do hold this and keep going, we've got, we're going to have to bite the bullet and start buying pullbacks there. We get some big levels though, 83.68, 84.05, right? If these buyers get this going, but that's not going to be easy there. That is not going to be an easy job for the buyers, and it looks to me like we may have some easier money here on the sell side here, even if it does, right, make that change over to the bull side. Not to worry though, we'll take whatever we can get, and we'll wrap things up right on the video tonight. Get a great plan of attack here for tomorrow. Everything's bullish for now, right? Will we get the 2-legged pullback? Will we see a range down here? Will we keep on grinding lower? Only time will tell, but at least now we've got a pretty good plan of attack and we're ready to go on this. Guys, don't forget, we get together every morning, 8 o'clock Eastern time to trade this stuff together in the trade room. I'll put all the membership links, all the free trading class links. I'll put all that stuff down for you guys. The description of the YouTube video. I'll put a big button for you below me tonight on the website here as well. Do not be afraid to call the office. I'm always here. If you guys have any questions, drop me a comment in the comment section below. I can answer questions there as well. And boy, thanks for tuning in this week. Good week this week, right? Busy week. Good week though. Looking forward to finishing up the week tomorrow morning. Have a great rest of your evening out there. If I don't see you guys in the trade room, I will see you back here next week. We'll get it all prepped up and we'll do it again for the 3rd week of January. Don't forget, Monday is a holiday, so we'll see you guys on Tuesday evening. We'll get right back after it on our nightly newsletter. My name is Joseph. As always, be well out there. Be nice to each other. Thanks for tuning in. We'll see you next time.